Hello guys, how are you guys doing? It's been a while. Um, the Alpha Sam here. I know I've not been making videos in a while. I apologize for that. I've been having to face some real life um, tough issues. Although I've been active on my Telegram community and my Twitter community, dropping some content, not content, but sharing chats with my followers and friends. But I know I said I'll be making videos like this every week, but unfortunately I've been healed for a while. I was admitted at the hospital, but now I'm back. I'm on my feet, standing strong. So I'm going to be making this video for you guys. So quickly, before we get into the video, if you know you're new to this channel, please do well to subscribe to the channel. I make contents that are very educative on the forex market, and please turn on the bell icon once you subscribe. It's free, so that you stay notified of every video every week. I make videos every week. So without further ado, let's get into the video. So here is a monthly chart of GBP USD, as you can see, and from the last video I explained some concepts to us on how to frame our directional bias using the month, weekly, daily, 4-hour time frame. So a top-down analysis, how to frame our directional bias, and how to take high probability trade using this top-down analysis. So from here, as you can see, that GBP USD in the year 2022 was dropping down for every month. These candles right here stands for each month in the year 2022. As you can see, this is November 2021, this is December 2021, while here is January 2022. From this candle right here, we kept dropping down. GBP USD kept dropping to come take out sell side liquidity right here. I'm talking about large funds. This is where they are driving at, to take out liquidity here. And as soon as they took out liquidity, you see, immediately started change. This is change in the state of delivery. It just went up here. There's a change in the state of delivery right here, creating a fair value gap here. Price did what? Look closely. Immediately we go here. Price came back to this point. This is a fair value gap where we have 3 candles, and we have the first candle to the left and the third candle to the right, not overlapping with their wick, overlapping the body of the middle candle with their wicks or the body. We have a fair value gap in such situation. This is what I mean. So the wick of this candle is not overlapping the wick of this candle. So this body is inefficient. It's just delivered to one side, delivered for only buyers. So we have inefficiency in that price action. So price will do what? Price will come and fill this inefficient price action at least to 50% level, which is referred to as a consequent encroachment level. 50% level from here to here, the 50%, if you take your Fibonacci tool to check, you see that price came, retraced to the 50%. In some cases it will fill it completely, and then we start driving higher. So as you can see, we kept going higher. Here we ran into this fair value gap here. Price filled it completely, and then we dropped down. As soon as we dropped down, created this swing low, there is a huge change in the state of delivery again. As for the month of November 2023, as you can see here, once we had this change in the state of delivery, also this green candle, this November 2023 candle engulfed this October 2023 candle, giving us a bearish order block, which I showed in my last 2 videos, explaining to you guys why we kept rallying higher. As you can see, this is another block, and also we happen to be, you know, in a fair value gap position. This down close candle, the wick, the high, that's the high, and the low of this candle right here, the wick do not overlap the body of this candle. So this is also a fair value gap. As you can see, we have price respecting what, respecting, so this is more like a bullish order flow. I don't know if you've been watching my videos for a while, you would have seen what I meant by bullish order flow is when we keep respecting bullish PD arrays, and you know, we have a reason to want to go higher. We always have a reason to want to go higher. So these are the things that you know, sometimes gives us a clear direction. It gives us a clear conviction that, oh, I want to sell for this month. So here we quickly we saw that for the month of April, price retraced into the fair value gap, which is also an optimal trade entry position. That's the 69% level and the 71% level, or sorry, 79% level of the Fibonacci retracement tool. Also mitigated this bullish order block, and then we kept going higher, taking out what, sell side liquidity. But if you look closely to the left, you see that right here, from this point, we have this. We have this fair value gap right here. So price did what you see right here. Like I said, when we have inefficient price action, price usually come fill it up, and then so price did what, we kept respecting bullish PD arrays, we kept respecting bullish PD arrays, but the moment we got to this point, price came what, filled this fair value gap, and what, dropped down hard. So for the month of October 2024, this is a change in the state of delivery as well. So looking closely to this candle, this is the month of September. So we had this month of September fill this fair value gap towards the left, and this was the year 2022. This is March, this is April, and we had price come by September. We feel this what's it called, we feel this fair value gap completely with the body of the candle closing on top, and then we dropped down. This October that we finished yesterday engulfed the September 2024 candle, engulfed the entire body. This is beautiful. So this is telling us that we should be expecting price to drive lower for the month, for the rest of the month that we'll be having for the rest of the year. So this is handing out to you that yes, we should be seeing a strong bullish move for US dollars. So any currencies, any foreign currencies trading against the US dollar right now is expected to be dropping down, while US dollar is gaining strength. So looking at this, we came here, fill this fair value gap, and then we dropped down for the month of October. So yesterday confirmed our directional bias, or would say we confirmed the change in the state of delivery. So what should I be expecting? What do I want to see? So first off, for this month of November, I would like to see this. I would like to see this. So this is how I draw out my order block, but I actually learned it from somebody, finest FX. He's called Bond. He's an ICT charter member. He's on Twitter. You can check him out. I watch his videos and follow his content. So from him is where I get to learn how to trade or he calls them enhanced order block. So sorry, my mouse is actually messing up. So looking at this price action right here, it's clear that it's clear to us right now that price is showing the willingness to drop down. With this engulfing the entire body of this, shows that yes, we should be seeing a strong willingness for GBP USD to what, to come into this monthly order block for what's it called, for let me put this. So price will come into this order block and then drop down. So where would our target be? I would say this is where we would attack first. We might want to see price come attack this sell side liquidity resting below here. So this is basically the month of April 2024. So we might be driving lower to come attack this April 2024 low. But the narrative is you just get a you get will I say like a mindset that okay, you know that for this month of November or for the future months, you only want to see bearish candles. You want to see candles coming down. You just want to see them coming down like this. But first, I want to see price come here and then we go down. Once we mitigate this order block, right here, this monthly order block, I want to see price drive down, because like I said, once we had the change in the state of delivery, it was handing out to me that oh, we are about to see a down move, a significant down move in GBP USD, which means that the US dollar is gaining strength. And ahead of the election, November 5 happening in November 5, I think we should be expecting a very, very volatile market. So it could go one or two ways. One is, I think, if I'm not trying to be political, right? But I'm just giving you my own opinion. I want to believe that if Donald Trump wins the election, then it's going to be a possible strength for US dollar. A strength for US dollar, which means we'll likely see GBP USD drop down hard. While if Kamala Harris, happens to be declared the president, the winner of the election, then we might probably see a change in the state of delivery again. See that US dollar weakens and GBP USD continues going higher, while attacking, probably attacking this high right here, So this is how I usually frame my directional bias, my monthly directional bias, which really helps me, lowers my expectations, and at the same time gives me confidence and high probability trades on why I should be taking this trade and why I shouldn't be taking this trade. So like I said, this is what I want to see. I want to see price has already opened, but I want to see it something that is known as power of 3, that is taught by ICT. Power of 3 is when price opens right, price opens and then goes up and then drops down. So power of 3 is accumulation, the scenario where we have price open and then starts going, could be going down, manipulation, then distribution. So let me give you what that looks like. let me show you what that looks like. So this is power of 3. So we have price going maybe sideways like this, right? So we keep going this in a bearish market. My apologies, my mouse is messed up. So we have this. So price keeps going down, down, down. Yeah, it's a bearish market. Yeah, and you know, we take out all the people that sold, right? Take out all the people that sold right there. You still have this, take out this high, and then have this low. Price then returns to this point. Price will like, my mouse is messed up, I apologize for that. So we could have price return to this point here, and then what, and then drop down from here really hard. So when we probably were in this state, this is the, let me delete this. So this is the accumulation phase, price going, and then we have this manipulation, taking out all the people who went short here, and then came down, and then still took out this high. We then drop down, and then come back to this point. This could be a driving factor, this could be another block, and then send price down. So that's power of 3: accumulation, manipulation, and distribution. So this is the distribution phase. So when we have what we could see for this month, as you can see, I would want us to go up, rally up higher. So tricking people to think that price is going to go higher. Then people start chasing buy, and then we distribute down. So there's going to be like an accumulation phase is where you start showing sell signs first. Then manipulation phase is when it takes out all the sellers by going higher. Then also people will start chasing it, and then it goes distributed. The distribution phase is when it goes back down to sell. So I want to see this. I want to see price go back into this, mitigate this order block for this month. So it could take a while, but your setup, what you should be looking for is, you want to see when price buys, you're looking for sell opportunities. When it goes up, you're always looking out to sell. So you're not expected to be buying in this kind of market. You could buy, but you have to be very sure. You have to have seen certain confirmations. But having a monthly clear bias like this, it gives you a confidence. Not exactly in hindsight, but just telling you that, oh, I want to see once price rally, I want to be selling, because I know that for the month of November, I'm expecting price to drop really down, to drop hard down. So having seen this, you have this conviction. This is how it works, guys. This is just how I trade. This is how I frame my order, my directional bias. So quickly, like I said, I want to see this for probably the month of November or the next one. So I just want to see price come back and fill this other block, and then we drop down, So let me quickly switch to the weekly time frame to see the view from time frame. So as you can see, for all the the weeks in last week in October, we still had all these lows right here. this is price dropping down, dropping down, dropping down. And although we are in this fair value gap position right here, so this fair value gap could be a driving for me, I would say it could be a driving factor to want to go. Let me remove this quickly. Okay, so this is a fair value gap on the left, towards the left side right here. So this could be a push. This could, you know, serve as a push for our candle, for our price to want to buy. So this is price dropping into this fair value gap position right here, the weekly fair value gap. So price could from here go to this point, which is the monthly order block, respect it, and then drop down. And then we target this April 24 low. Like I said, we'll be targeting, but first, this is our first target, this is the second, this is the third, and this is the final portion. So you don't necessarily have to be able to predict the weekly close. All you just need is like I said, a conviction that, oh, once price comes into this order block, you want to start looking for selling opportunities. You want to be looking for selling opportunities to sell, because it has shown to us that, oh, this is a tendency for price to want to drop down. So you start looking for sell opportunities, and you sell when you have your, you know, all your criteria is met. You sell till we get to this point. At least you don't necessarily have to get to this point, but at least take profitable trades. So whatever it is you're able to get from the market before you even get to those points. And I mean, when during the period where we have price dropping down, we'll not always see just bearish candles. We have bullish days. Even on the monthly time frame, we'll have, you know, bullish candles in some cases, maybe one or two, before we arrive at this final destination. So it's not the truth is taking a loss is actually not a bad thing. Sometimes it helps you get on your feet. So the truth is you always take losses. So that is the frank truth that some people don't want to hear, but that is just what it is. You always have, you know, losing trades. So like I said, I want to see this fair value gap serve as a driving factor to push price up, to want to come into this monthly order block. Once we get into this monthly order block, I also want to see this order block be our you know, array, our PD array, to want to sell price. So once price fills into this order block, it could tap into it and start dropping down, or it could even fill it completely, or even get to the 50% level. Although I don't want to see it fill it completely, I want to see it respected to maybe the 50% level, and then start dropping down. So for today we have NFP, and as you all know, NFP could be volatile. I mean, ahead of the US elections, that is just 4 or 5 days away. The election is taking place on the 5th of November, and today's 1st of November, the first day of November. So I think I want to believe that NFP today might probably take out the buyers. That's the people that have bought for the month of at least for the past couple of weeks. Okay, so this is the daily time frame. This is what I would want to look out for. So since we are in the weekly fair value gap right here, this is the weekly fair value gap. Remember I said something about power of 3. So we could see price this is price going down. So this could be the accumulation phase, and then we'll see a manipulation. So I want to see a manipulation first. I want to see price take out take out liquidity. So this could be our target. So price could what? Come take out this high, this daily high, previous day high, which is for Wednesday. So price could come take out this. So that will be the manipulation phase, and then distribution. So we start going down. What do I mean by that? We've been coming down, right? Then we do what? We manipulate that high and then drop down. So if we have this, if we have something like this, is to confirm what? To confirm our conviction, to confirm our bias that we are beginning to respect bearish bid arrays. So today I want to see NFP buy, but NFP is a volatile stuff, so could first of all take out this low. People that probably bought from here will take out this low, goes up to take out this high, and then drop down. Or it could even just drop down if we are in a very heavy bearish market. It could not even feel, it could just come back and sell off. So but what I would love to see is for my entry criteria to be perfect, I want to see price goes up, take out this high, mitigates this very bearish order block, and then sell off for the month of November 2024. So this is basically how I frame my my top down directional bias for GBP/USD. But I also check out dollar. What exactly is dollar showing me? Why do I think I want to go lower on GBP/USD? I mean, you need to have a strong a reason to want to sell GBP/USD too, and you have to confirm that using DXY. Okay, you have to confirm that using DXY. Sorry. Okay, so DXY. So this is your US dollar index. So this is what I'm looking out for US dollar. As you can see right here, it's very simple. This is the daily time frame for DXY US dollar. So as we for a while we've been selling each day down close. Here we had this is an implied fair value gap from the previous days. So we respected this IFVG, price came down, came into this IFVG again and dropped down, took out all the sell side right here. Then we started rallying higher. If each day open goes up, rally, close, this open goes up, close, goes up, like that. Here we retraced into this fair value gap, and then we still kept going higher. Here we created a volume imbalance. So these are not cherry picking points. This is not cherry picked. I mean, these are positions that are valid in price. So these are inefficient price actions. When we have this kind of green candle here close, and then the bodies of these candles and this candle do not overlap, so we have a volume imbalance according to ICT. So this volume imbalance is expected that price will come and feel the volume imbalance, and then it will be a driving factor to want to go bullish. So like I said, that I'm going bearish on GBP/USD. So why is that also a thing? It's because I feel that this is a strong bullish conviction. This is a strong bullish conviction for me on dollar. So I mean, dollar just dropped into this volume imbalance. and we are respecting it. So I want to see price come up and attack this equal highs right here. You see this high here, this high here. It is not random. This is algorithmic. This is algorithmic. I mean, this is I would say a generated. This is a generated equal highs. I mean, for random sellers, retail traders would see this as resistance. Yes, that's what the books tells you. It shows you that when you have something like this is resistance, that price bounced off this and went down, and then price is tapping and it's going down. It taps this, it's still going down. So a lot of people would take this as resistance. They want to sell. They start selling from this point. Start selling, but it's telling us that this is. I mean, I'm a retail trader as well, but I'm an ICT retail trader, which means I view the market differently from a random retail trader. So this is telling me that this is a generated liquidity. As you can see, this high and this high right here. So I want to see price take out these two highs, this equal highs. I want to see, this is liquidity. This is liquidity. So we want to what? We want to go high. So now we have this low right here. Let me take this off quickly. This low right here, we've taken out this low, we've taken out sell side liquidity right here. It means something to me. It means something. So price went up after we had this volume imbalance. Price went also, as you can see, this is also a volume imbalance right here. Price came down, filled this volume imbalance, and then start going up to take out this high. We came down to fill this volume imbalance right here, taking out this low, filling this volume imbalance, and then what do you expect? I'm expecting price to rally up and then targets this equal highs right here. So with that said, it means that I want to see if dollar is going higher. It means GBP USD, Euro USD, all the foreign currency trading against the US dollar will be dropping down. So this is also supporting my sentiment on GBP USD, because I want to see, as I was saying that I want to see GBP USD drop down. The same goes for this. I want to see dollar goes high. So this is supporting my bullish sentiment for dollar. Since we came into this volume imbalance, we've tapped into it, we took out sell side liquidity. I want to see a bullish day. I don't want to see us go down at all. What exactly do we want to do? Down, going down. Do you understand? So I want to see price start going higher, bullish move only, because we already took out sell side liquidity and now we should be attacking this buy side. So a lot of people have trusted this as what? As resistance, and have their stop loss around here, hanging around here. And a lot of people have sold. They're already profitable in the market. People that are swing traders, people that have not secured their sell positions, that are still feeling that price is still going to drop down higher. No, you're going to get wrecked. Price is going to come back and attack this. This is not random. This is not random. It is what? It is a generated liquidity. It is a generated liquidity. This is too clean to me. It means that something is going to happen, which basically is price is going to come attack this on dollar. And I'm going to show you in my next video whatever outcome we have. So like I said, so on the daily time frame, I want to see that US dollar will go bullish, and on the other hand, GBP USD will drop down. But first, GBP USD, I want to see it tap into that order block and then sell. That would give me a very strong conviction. Because first of all, we'll be taking out liquidity. We'll be taking out buy side liquidity for GBP USD before we sell, and here already on dollar we've taken out sell side liquidity before we buy. Like I said, we could also see a tendency to just drop down if the NFP release comes out today, but I want to see us take out this high right here. These two equalize, they look too clean. This is not random, this is a generated liquidity. So having that said, on the on pairs like the USD CHF, what am I looking for? For USD CHF, I want to see because they are trading against the US dollar as well. So USD CHF, right? So as you can see, I already labeled my buy side position, but first off I want to see this. I want to see price come to this is also an equal high. This is also an equal high. This is a very clean equal high. Too clean, in my word, too clean. A lot of people would have sold right here. So I want to see USD CHF, that's Swiss, to want to buy. I want to see price going high to take this buy side liquidity, and then before we attack the previous week's high. But first, this daily high is what I want to see us attack first. So we already took out liquidity here, as you can see. We already took out sell side liquidity. Price gave us the swing low. We've been consolidating. This is crazy. This is really crazy. This is when you have this kind of choppy price action, you really don't even want to get involved. But looking at it here, you see that we have our order block. Are you seeing what I'm saying? So we have this order block right here. This is price handing out to us that, oh, this is it. And as you can see, price came into this, respected the order block, traded up, came into this again, respected it, went up. But we've been having choppy price action, been having very large consolidating days. So this is price going choppy. This is a choppy price action. We went take out this high, or we created what, an equal high, a daily equal high, which is too clean. Then we came down, taking out this low. We took out this low, and also we took out this low, this candle's low right here. Or we are still what? We're still in our bullish order block. To me, it means that we could see a rally in price. So this is what? This is a bullish PDRA, and it's showing our bullish order flow. So from now on, I want to, just like I said for US dollar, I said US dollar is going to be gaining strength, and we want to see bullish move for US dollar on the daily time frame. So also for US dollar Swiss franc, I want to see a bullish move for Swiss franc. I want to see us come attack these equal highs right here. This is too clean. So what do I then do if I am expecting price to want to go higher? What do I do? Do I just take a trade buying? No, I don't just do that. I know we are already in a key level, which is this order block. This is a key level, right? We've had all this choppy price action going back and forth for days, for several days. I mean, for nearly 2 weeks, been going back and forth, and then we had this manipulation, take out this high, then we dropped down, then price came back into this fair value gap, and then dropped down, taking out this low, and also this low right here. So now I want to see us go high, because we're already in a key level rather. So now I want to see first thing I want to see, because right now depends on whatever it is you like to trade. For me I think I want to. I'm a day trader, but now I'm trying to switch my time to becoming a swing trader because of the fact that I'm not always on the chart every day. Although sometimes I check the chart every day, but I didn't really like to trade every day because I work and it doesn't allow me comfortably sit down and analyze the market. So I want to see this. We already took our sell side liquidity, created this swing glue right here. I want to see price give us a shift in market structure. Let me go down to the 1 hour time frame. So we had this don't worry guys, I'm going to get a better mouse. So like I said, we're already in what? We're already in a key level position, which is the daily order block. So since, excuse me, so since we are already in this key position, key level, this is the Asian session right here. This is the Asian session, this blue box. So I want to see price do something. Like I want to see a very good move. Like maybe we quickly take out this high, this candle's high right here. It will be handing out to me that, oh, there's a change in the state of delivery, a market structure shift. Let me use that word. So if we can have a sharp move towards the upside, then I'll be looking for any retracement. So this is what I mean. So if we can probably maybe have a sharp move here, like a very strong move, we have a body closing up on top. So when price retrace maybe into a fair value gap or something, anything, any bullish PDRA that can confirm to me that, oh wait, okay, right now we've had this candle open. This is the open of this candle. So I've loved to see maybe this candle move up sharply. By the time it closes on top of this high, and then maybe a retracement into the fair value gap or the inversion fair value gap or whatever. Anything could be a factor for me to want to take a bullish move trade. As you can see, we are beginning to rally, but I want us to rally sharp. I want us to take out this high quickly with a very large body, just something like this. If we can do that, then price will retrace. Once price retrace into the fair value gap, I'm going to be taking the trade, and it's going to be a buy trade ahead of maybe London session, or ahead of New York session. It could be any time, but I need a strong conviction first. I need to see my entry criteria as what I need to see them showing me a strong signal to want to buy, like I said. So my targets for US dollar Swiss franc is this high, the previous day high. I mean, not the previous day, but the previous week's high. Let me use the word. So this high and this high looks too clean to me, and I want us to take it. So as you can see, price keeps this is not random. This is not random. Look at this high. This high is lower to this high, and this high is also lower to this high. So which means that it's saying something. And what is that saying? It's saying that this is generated equal highs. So I want to see price quickly come and take out this high. Looks too clean. It looks too clean to me, and I hope we're able to take it out. So my trade today, I'm going to be looking at opportunities to be buying on USD, US dollar francs, or in fact any pair. Okay, I'm going to be buying on US dollar against Swiss franc, US dollar against Canadian dollar, while on foreign trades, foreign currencies like GBP USD, I'm going to be selling. Euro USD, I'm going to be looking for sell opportunities. and that's if I get to see a good signal. I'm not just taking the trade because I want to take the trade. No, I'm looking for a good reason to want to take the trade. All of this are just bias, are just sentiments that, oh, this is what I want to see, this is what I am seeing, and this is what I should be expecting. So I will want to take my trades based off that expectation. Right here we had what we've seen, that this low has been run. If you look closely, let me take this other block and leave it right here. So if you look closely, I think this is already a shift in market structure. This is already a shift in market structure. This low has been taken, this low was taken, this swing low right here was taken by this, taken out by this price, and then we have this is a shift in market structure. Look at this low. This low has been taken out. So those people who bought here will have their stop losses here. We ran them out here. If they didn't secure their positions or secure their profits when price got here, we took them out here, and then we had this sharp price move taking out this high. So it is telling me something. It's telling me there is a change in the state of delivery. So this is what I mean. This high right here, was taken out quickly. So this is the change in the state of delivery. Price came quickly, taking out this high, this candle's high, and then we had this open, and then we had this close. So if I'm going to be taking an implied, this is going to be an implied fair value gap. Okay, so let me look at this. I could take this trade. I could take the trade, but I'm not advising anybody to take the trade. So this is the 50% level of this. So this is a strategy that's ICT, I think it's 2023 ICT mentorship, I'm not sure, but what am I looking out for here? Right, so this could be an implied fair, this is an implied fair value gap, although not 100% my favorite thing, not 100% my favorite thing, let me use the word. So sorry. Okay, so this 50 of this week, so the 50% level of the candle, the left candle's wick. So as you can see, this candle they have a very large wick. So when you have this kind of price action, this could also be traded as a fair value gap. So we would have between here and here, we would have the consequent encroachment of this implied fair value gap. So so maybe, just maybe, if price probably returns to this 50% level, this consequent encroachment of this implied fair value gap, sorry, okay, I'm going to be putting that at the bottom, or rather middle, the right. Okay, so this is an implied fair value gap. The wick of this candle, you measure the 50% of this candle from this close right here to the high, you measure 50% level, which happens to be here. And also this week, from this open to the low, you measure the 50% level, and you have what you have this week. And also, because the reason being that, in fact, we have a fair value gap right here. This week do not completely overlap. You wouldn't see it unless you zoom in clearly. As you can see right here, this is also a fair value gap. So okay, yeah, clean. I mean, I have two reasons to want to go bullish now. First, I want to see price respect the consequent encouragement of this implied fair value gap, and I want to see price respect this. So I want to see this comes down into this fair value gap, maybe touch this consequent encouragement, and then we start going higher. So we are seeing this candle, right? I want to see this. I don't want to see it take out that high anymore. This high, there's no need for price to take out that high anymore. We already have this. We already have the change in the state of delivery. This is handing out to us that, oh, we already have our turtle soup here. Turtle soup is when price comes, people think it wants to go high and then comes down, take out the low, taking out people's stop losses, sell side liquidity, and then we start rallying high. So we quickly rallied up, take out this high, so giving us a market structure shift, and then we have something like this, a catalyst to want to buy. So once price comes into this point, this is an implied fair value gap. Let me write it. So this is going to be an implied FVG. So we have this implied FVG right here. So if price retrace comes to this consequent encroachment of this implied fair value gap, I want to buy. If it feels this, what's it called, if fair value gap as well, I'll also want to buy. And my target is going to be, this high. My first target will be this high. My second target will be this high. So this is going to be a trade that I can take, provided that price comes and fill that portion for me. Sorry, it's supposed to be so I mean, if I'm swing trading, this is what I'll be doing. My stop loss will be below here, safe below here, which is somewhat, this is, let's just say 65 pips, and my first target will be this high. My first target will be this high, while my second target will be this high. So but this is 1 2 3. I mean, this is nice. This is not bad at all. I mean, this trade for a swing trader is not bad. And if you want to narrow it down, you can also go to the 15-minute time frame. Oh, beautiful. So on the 15-minute time frame, I think, right, so let's look out for what price is doing. Let's see what it does. I'm not advising anyone to take this trade, and I want to believe by the time this video is uploaded, this would have played out. But you could go check your charts, and this is how you learn more. This is how you get better at trading. Like I said myself, I'm also a developing trader. I just feel I could share my opinion, my knowledge with the community, and this is what I am doing. So we have this price coming down, and then this is wicked out. It's showing to me that it's showing to what it's letting us know that this is a willingness to want. This is manipulation. This is the manipulation phase. Like I said, accumulation, manipulation, and distribution, then redistribution. So this is power of 3. This is power of 3. So let's look out for what is going to happen, what is to come, and I think that will be all for me for this video. I hope you've learned something. I know this is a very long video, but I promise you, it's worth it. It's worth it. This is going to help you get better at other, at trading. If you don't have a setup, if you don't have you know a framework on how you take your trades in the month and the week, for the week, in fact daily, this is going to help you get better at it, because you have things that wants to convince you to want to take this trade, that oh, this is supporting my idea, this is supporting my sentiment. I think that is what you should be able to learn from this video. The fact that, oh, we are seeing that price is beginning to respect bullish PD arrays. The fact that we are seeing that price is beginning to respect bearish PD arrays, and that is why I want to go high. This is why I want to go low. So for this video, as at November 1st, I would want to see, like I said, I want to see USD CHF buy, because dollar, I want to see dollar go high. I want to see dollar go high. The US dollar, DXY. So you could check out the DXY chart. So in fact, look at this, is beautiful. This is clean price action. This is what I mean. This is price dropping down, taking out this low. This is a market structure shift, taking out this high, and then price would retrace into this, taking out all this liquidity here, filling this fair value gap, and then we start going up, just like I said we would. And then for GBP USD or USD Euro USD, whichever one, I want to sell. Maybe price will come. So I want, like I said, we are already in the weekly fair value gap. Maybe price will go up a little and then drop down. But I want to see us come into. So when we are going to be filling this monthly order block, I do not know. Nobody knows that. But I want to see us mitigate the monthly order block before we sell. That is what I want to see. It will confirm the power of 3. Open, rally, and then sell. Open, rally, and then sell. So since today is the open, we opened on very good position. Maybe we're going to rally for the first couple of weeks, and then we're going to be seeing a hard drop down. Or maybe today NFP is going to be a catalyst to buy. Maybe price is going to quickly rally higher, and then we drop down. So like I said, this is not a financial advice, it's just me giving my opinion, and I hope you guys learn from this. If I'll have to make another video on the outcome, I'm going to be doing that next week. So without further ado, thank you very much for watching. If you're new to my channel, please take your time to subscribe. I understand this is a long video, but pardon me, I'm going to be making shorter videos from now on. And it's just it's informative and insightful, just like the name of my channel suggests, insightful sound. So thank you very much. If you're new, subscribe to the channel, turn on the bell icon to stay notified of every future videos, and thank you for watching. See you on the next one. Peace out. Bye. Thank you. Oh, okay.